All right, my beautiful friends, it's Saturday, not Sunday, so you're not seeing things. I usually do these on Sunday. I had a window of opportunity here, so I'm taking it to do my markets, a look ahead segment right here and right now. Let's start off with last week before we move forward. It's going to play right into what I believe we are going to see starting Monday. Now, last Saturday, I said I expected a volatile week. To say the least, we just had a volatile week off the Richter scale. And again, there's an adjustment going on here with regard to these markets, and that's why we're seeing all this volatility. Some of that, I believe, has already been alleviated with this market kind of adjusting to the new environment. So what is the new environment, and how is this going to play out next week? Couple of things. The two main topics that are going to be, I think, at least pushed down everyone's throat is, number one, the China trade deal continues to go well. The narrative must be maintained. It started to lose luster for a while, but it seems towards the end of the week, well, it's starting to make the market happy again. And I'll tell you the main thing that is making this market happy is the narrative about a rate cut. It's all over the place. Larry Kudlow yesterday, screaming from rooftops, almost putting an urgency on it, saying that the Fed should cut rates immediately. Not like in a week, like immediately by 50 basis points. Again, the grand scheme is simple. Keep the middle class as pushed down as possible. Rob them from earning any kind of interest on their interest earning accounts. Right now, where rates are, they're already being robbed blind. Now, if rates were to be suppressed even further by, the Federal Reserve cutting rates immediately, as Kudlow says, well, the middle class would get robbed even further. This would be very stock market positive. It will also, he said yesterday that the president wants the Fed to maintain their enormous balance sheet. And understand, the Fed can't just say they're going to keep rates suppressed. They have to print cash out of thin air, buy the debt to keep rates suppressed. That's how it works. Yes, both of these mechanisms are very stock market positive, and I think this is going to be the narrative pushed forward. Look, the game is pretty simple. Most members of the middle class who do have, let's say, a 401k plan or some type of account that only makes money when stocks go up, again, it's a rigged game. Whoever came up with this theme, it's a joke. Get as many people as they possibly can to pour cash into the stock market, because it really will be the only game in town. Understand? What are you going to do? They want to suppress rates even further, immediately cut them according to Kudlow, keep the Fed's balance sheet inflated off the Richter scale. So what does that mean? It makes the stock market the only game in town. Sure, should cash be going into other assets like precious metals, maybe even cryptocurrencies? Yeah, it should, but not in this environment. More cash is going to pour into the stock market because that's the game. They got to get more people in it. They got to inflate it further. And then what's going to happen, as usual, this is no secret. These central banks, none more so than the Fed, is a serial bubble blower. They inflate the bubbles. They pull the plug when they're ready to do it. And people who only make money when stocks go higher get fleeced, because the investment banks, the Wall Street guys like myself, short the market. And all that cash gets transferred from the masses to the very few. That's the way it works. That's why it's set up like this. It's very simple. So yeah, sure, People can make more money in their investment plans right now, 401ks, investing in the stock market on the long side, but they always get out too late. They're always the last people to get out. It's always the institutional investors getting out first. And I wonder why that is. Because they're the ones pulling the strings. We know that. We know who runs the Fed, the 6 banks, which I outline all the time and written articles about and everything else. So, here's where we are keeping all of this in mind. The narrative is very simple. China talks going well. Number 2, which is the biggest of them all, is rate cut. Market's going to love it. So the setup is simple. Looks to me like stocks are going to be pushed higher next week. And I don't expect to see as much volatility as we just went through. This was bad. But we'll see how that plays out moving forward. So keep these things in mind here. This is the game. This is what's going to happen. You're going to hear more talk about Brexit, more talks about forming other unions. I covered this yesterday. European Union, you're going to get a North American Union, South American Union. All this is going to be put together. The scheme is very simple to form a one world government. It's unfolding right before our eyes. Around the world, the middle class is getting decimated. Two-tier society is here. It's literally here now. The middle class had it, if they were not borrowing beyond their eyeballs with consumer debt and personal debt, hitting record high after record high after record high, the middle class would again be pushed lower on the 3-tier society that we have now immediately. And that is also going to be the plan. Look, when this all corrects to a fair value, when it's allowed to happen, after they get every single living soul that can to put every dime into the stock market that they can muster, that's when they're going to pull the plug. And again, the big one is going to occur, mark my words on this, when we get a snapback in the bond market. I mean, this inverted yield curve is getting a lot of attention lately, but again, they're doing a pretty good job, the mainstream, of talking it down. Oh, don't worry about it. Don't look here. Look here. Stock market's going up. Ignore the yield curve. Our economy is strong. That's the narrative too. And all we get is round after round after round of bad economic news. With that said, you know the drill. I will see you on Monday. This is the way I see it playing forward. I would love to hear from you. With that said, I'll see you on Monday.